Thank you, everybody. Our next session, the topic is product built for scale, the modern architecture of fintech platform. Well, it's an absolute honor to invite the speakers on stage. Please join me and give a huge round of applause as I call their name. The first one is Mr. Mannoj Varma, Director, Lyra Network. Oh, okay. Moving ahead to the next, Mr. Varun Dudeja, Head Business Development, APAC, Pismo. Mr. Sumit Misra, Senior Vice President, RS Software. I am expecting better hands, huh? Thank you. Mr. Nirav Kamdar, VP Payment Tech for Emerging Market, Amazon. To moderate this, I would request Mr. Kannan Murali, founding member and head of product M2P Fintech. Is Mr. Mannoj sir here? Yes, Mannoj sir, I request you to please join me. A huge round of applause for Mr. Mannoj Varma, Director, Lyra Network. Looking forward for this session. Over to you. Thank you so much.
Okay. Good afternoon, everyone. I'm Kannan. I'm a founding member of M2P Fintech, and I've been associated with M2P for the last 10 years. We are a fintech headquartered in Chennai. We provide software solutions, card processing frameworks, UPI processing switches, etc., to banks and other financial institutions. So we have a stall in the first floor. O1, hope you can join us and look at what we have to offer. And thank you everyone for joining this panel discussion, product build specifically for scale. So that is the topic of discussion. And fintech has evolved a lot from providing point solutions for specific use cases like digital KYC to other underwriting use cases or anything very specific to now it has started powering large ecosystems like digital banking, digital lending, all these large ecosystems, large financial institutions are now getting powered by fintech.
Hello.
For a lot of their use cases. So it is not just important to build something that scales for a few thousand users now. It is very mandatory. Any fintech that is aspiring to grow big has to build their systems that can scale for millions of users while staying compliant, resilient, etc. Right? So I have a wonderful set of panelists with me coming from different walks of fintech background, from tech to growth and strategy to business development. So I'll probably let them introduce themselves and then start with the discussion.
All right. Hi everyone. Glad you could make it here. My name is Nirav Kamdar. I am Vice President at Amazon Pay. I lead the international emerging payments technology that includes India, LATAM, Latin America, Middle East, and Southeast Asia. We power Amazon Pay in all of those countries.
Hello, everyone. Very good morning. My name is Varun Dudeja. I lead business development for Pismo. We are a technology company providing all-in-one processing for banks and fintech. So ranging from card management systems to core banking to wallets to loan management systems as well as merchant acquirer processing services. We operate globally across 5 continents. So it's a Latin American headquartered organization which expanded to India 3 years ago. We've been doing okay, and we're looking forward to engaging with you all in the coming 2 days. So thank you.
Thank you. I am Sumit Misra. I am Chief Innovation Officer at RS Software. So we are a technology provider company, and we are humbled to inform that we have built the UPI, the BBPS, and the EFRM system, which is protecting all the transactions. We are headquartered in Kolkata, and we have offices across the Bay Area, the Canada, the Netherlands, and in Southeast Asia.
Hello everyone, this is Mannoj Varma. I'm representing Lyra India. I'm director for Lyra India. Lyra is a payment solutions company. We are a French headquartered company. We have offices in 20 countries. We provide payment solutions to banks, fintech and large merchants. We are present in India since last 18 years. And one of our flagship project that we have done is, we have enabled acceptance of UPI at Eiffel Tower in France. And many more places will come up, and you will know about it during the course of GFF in next 3 days. Thank you.
Right. Thank you, everyone. So we'll probably start the discussion with a very broad question, right? Scaling in fintech. What does it mean? Does it mean processing more transactions? Does it mean improving the customer experience? Does it mean adding more adaptability to your platform to cater to regular changes that keep happening within the ecosystem? What does that really mean? Maybe Nirav will hear from you first.
Thanks. I think all of the above that you mentioned. It's not only about scaling for number of transactions. It's also about how we scale. Like, for example, are we able to maintain the latencies and success rates that customers expect from the platform? Especially as we scale, some of these challenges start emerging. Another aspect of scaling is also scaling for resilience. So is the stack going to continue to remain resilient as it scales? Typically, failure rates will increase. And especially in a fintech, generally what happens is there are multiple players involved in every transaction. So, how do you make sure that the entire transaction path continues to stay resilient? User experience or scaling for user experience is another aspect of it. How do we also scale for data? So things like making sure that the customer's data is protected, both from a privacy and security perspective. So there are lots of different aspects of scaling, and that's what we'll discuss.
No, I think I kind of totally agree with you on this one, right? So if I was to define it in one word, I think scale is multidimensional, right? So for example, right, let's talk about, so while it is about increasing transaction volumes, but it is making sure that it happens at the right time. So a Black Friday sale or a Diwali sale in India, is your platform equipped to go 20x at that moment and then come back the next day, right? It is about being resilient in terms of regulatory compliance. At some point in time, because of some natural calamity, let's say a certain region goes down, is your platform equipped to move to another region immediately so that the customer experience is not hampered, right? So scale is resilience, scale is to be compliant with regulators, scale is to be obviously transaction volumes and processing definitely. But in the end, it has to be everything around the customer experience, right? That's, I think, all of us are here for. So if you're able to get the customer experience right, I think you can say that a scale is a mix of volume, velocity, and value that you drive for the customer.
Thank you.
Yeah, I think I just want to add that in case of it is mostly about the resilience and the compliance part. And the resilience is it is basically not only you do not lose transaction or you come up early, but you can gracefully degrade, because that is where the customer experience comes in. And the second, in the compliance, it is across the entire flow. That means before the transaction happens, during and after. And that three phases of it, the compliances are little bit different in each of them. And we have to comply to that. even when it is scaling, say, to 20x, that you mentioned. Yeah, that's fine.
I think as you rightly said, Murali, scale is not only about transaction processing, it is beyond that. Once the transaction is processed, there are many activities that needs to get performed, Especially if you ask me, more transaction, more storage space is needed. This is one problem that, we actually do not see that. But this is one of the big problem, temporary storage, permanent storage. Storage of data, transaction data for 10 years. How do you scale that also? This is also a very important factor. So what happens, transaction processing capability, we are increasing, this is one thing. But normally, there are other, satellite and subsidiary activities that we need to perform to ensure that we are able to scale, from the all aspects, there are, recon, post-transaction processing activities we need to scale, we need to scale on, human resources also, because all the activities are not automated also in nature and you cannot perform, things automatically. So you need a lot of people to do that function, compliance, hardware systems, HSM, security aspect, and then today what has happened, we have a problem of plenty. There are many things, many partners, many integrations to do. Every time there is a new integrations, new payment options, hundreds of, AI, agents, AI topics, everything there is a different use case. So there are plenty of things that we need to do, and we need to scale. And the main problem that I see today, how do you test, pre-test the scale that you want to achieve? The mechanism to do a pre-test for scalability is very difficult, and very expensive also, So these are major challenges that, we are facing today on the scalability side. So I think everybody is trying to do whatever best they can do, but definitely there is a big challenge, when you try to scale your systems, for the volumes that you are not fully aware of. And these days, the volume is not growing from one value to the second value in some percentage. It is growing in X, and this X is definitely not known, So this is a big problem that I see today.
Absolutely. So I think from this discussion, right, what we definitely can see is scalability is, especially for fintech platforms, is multidimensional, right? So we'll probably, over the subsequent questions, get deeper into each dimension and see how we can discuss about scalability in specific areas, right? The first one I want to touch on is my favorite, which is security, of course. Sumit sir, with increasing fraud and cyber risks, what are the scalable approaches for managing security within fintech platforms?
Sure. See, to have a scalable security, you need to have something called a scalable real-time fraud and risk management system. So that real-time aspect becomes very difficult to implement, but that is the most important thing that we have to strive to reach there. That's required. So, for example, while screening, we cannot bring our levels down, but we have to do that at speed. The issue is that you have to have an architecture such that you can put in multiple filters, and that will not impact the latency so much. So you want to increase the filters, but you don't want to impact the latency. So how do you do that? Obviously, you have to do parallelism. Now, if you have to do parallelism, the issue is it uses the context of payments to do that filtering. So how you can gather all the information about the payments together and then distribute across the parallel threads so that you can process them in parallel and then get a result out of it. So basically it's a scatter-gather type of a framework that you have to utilize at scale to support the scale. And there's a technical challenge out of that because it is distributed. How do you do that? All of that comes with that scale.
Thank you for that. Maybe we'll move on to one other thing, right, which is probably the hot topic of today. How does AI and ML, what is the role that it is going to play in the architectural decisions that companies take when trying to build scalable fintech systems?
Yeah, it's a good question. Um, I think AI and ML is already being used at almost every level or every layer of the fintech stack. I think over the next couple of years or maybe 2 to 3 year time frame, that usage is only going to deepen. Moreover, some of the new innovations that are happening in AI, from LLMs to agentic to MCP servers and so on, it's going to. I think there is a lot of exciting innovation that's going to happen in the fintech space because of these. To give a few examples, for example, we already use ML, many of us use ML in the credit space in order to determine whether, for example, whether to give credit to a customer or not, or what kind of credit line to give. And this is very useful when, especially for thin file customers, where you don't have enough information about the customer. These are usually the credit underserved customers, and you can use other data outside of the file to determine whether to give credit and responsibly give credit. That's already being done today in underwriting, but there is opportunity to use AI ML in the entire credit life cycle. So for example, to assess the portfolio health on an ongoing basis, or to determine collection strategies, for example. These are all good fields where today there is a little bit being used, but there could be a lot more that will come. Another one where AI ML I think is going to play a key role is going to be around personalized user experiences. So for example, determining what is the right payment method to use for a particular user, and then nudging the user, right? For example, if there is a customer who is, let's say, cash habituated, then how do you nudge the customer so that they go from or graduate up the funnel into the digital part of the world? Rewards is another one that, what does this customer value, and then give them incentives so that it's not a one size fit all. Give them rewards that can help them come more into the digital ecosystem. Voice bots, chat bots are again going to be very useful in the customized, personalized user experience. A third area is what was mentioned earlier around fraud and abuse. So fraud detection, abuse prevention, all of that. This is where I think ML is already being used extensively. But one problem with ML is that it learns based on patterns that have already occurred. Right? But bad actors are not going to restrict themselves to patterns that have already occurred, especially if they are being caught. So this is where AI and especially LLMs can play a larger role, or will play a larger role in the next couple of years, where they'll be able to use multiple different signals, like where the user's device, user's location, spending patterns, and so on, and proactively detect anomalies that can then be used to detect fraud and abuse much more effectively. ID verification, again, another area where ML will be used. Document processing, computer vision, biometric, all of those places, right? There are lots and lots of uses. Another one that I feel is waiting to happen is going to be the whole personal finance space, right? Where based on your spending patterns for a particular customer, imagine there is an agent that is kind of ambient, that is looking at your spending patterns and coming up with recommendations on, hey, on how do you save? Like for example, let's say that you are spending quite a bit on a particular merchant, right? Then it may come back with a recommendation and say that, look, maybe you want to buy a subscription and hence save X amount from here, right? Or maybe you have money sitting idle in your account. It might come back and say that, look, you can open an FD with this, and if you look at all the agentic, that's where we are headed, right? Where the agent might even help you complete the task, right? Complete the opening of the account or opening of the FD. So lots of different use cases. Another last one I'll mention, sorry, I'm passionate about this topic, is the agentic payments, right? For example, where an agent can determine what is the right payment method to use for a particular customer and make the payment on behalf of the customer. It can be combined with agentic shopping. Like for example, one of the things that we do at Amazon is there is this program called Buy For Me, where a customer searches for something on Amazon, maybe don't find it there. The agent will actually go scout the internet, find other merchants where the product is present and come back and tell the customer here it's present. Or do you want to, you may want to look at it from this other merchant. And imagine if now that shopping agent talks to the payment agent and just makes the purchase for you right there and there. Right? So these are some cases where I think agentic use cases are going to like proliferate in the next couple of years on this whole AI.
And even in this entire building out agents, right, it can not be separate silos where there is a payment agent and then there is a shop agent. It all has to work together to create that seamless experience for a customer. So it is going to be very interesting how the agent space evolves, breaking multiple silos, creating workflows that make meaningful experiences to the customer. Going to be really interesting.
Absolutely, yeah. And just agent to agent talking and handing over tasks from one agent to another agent is going to be super interesting.
Awesome. Okay, so we'll probably move on to the next question, where I want to ask about how do you balance modularity, of microservices, APIs with complexity and operational overhead. How do you design your system the right way, not break it into so many fragments that you then end up getting into a noodles of managing multiple microservices?
No, thank you. That's a great question, right? See, modularity to start with and microservices are of utmost importance at this point in time with the way customer experience is changing every few months, right? You need it to be modular so that the banks and the fintechs could adapt. But that's exactly how we look at it. So modularity has to be seen from a customer viewpoint. So let's give you an example, right? We as Pismo relate ourselves, our microservices to Lego blocks. So essentially what I'm saying is we go to a bank, we give you Lego blocks and we can help you build the platform that you're imagining for your customer, and the customer experience is completely up to you. Now if I give you a 600 block Lego block and I tell you go ahead and design it, it's complex. And it's going to be very hard for you to do it, right? So let's say you were supposed to design a car, cannot. Now, if I take away modularity and I say, here is a sports car, no, I was looking for an MUV. I wanted a multi-purpose vehicle so I can use it. Okay, I cannot change it. So then what is important is looking at the customer viewpoint, if I can involve modularity, which would give them the right set of those Lego blocks. So I give them the tires, I give them the chassis and the cover. And tell them, okay, here it is with that limitation and that's how you build it. I think that's when it works for it. And with this, you basically support your banking clients or any other technology provider that you are trying to help in taking away that operational overhead and bringing in the efficiency. So it's modularity done in the right way with that customer mindset. I think that's how we've been approaching it so far.
So maybe one more follow-up question on this, right? So since we are also into the infra play, I can clearly understand what you're talking about. But if we unpack that question, doesn't that increase the customizations that you have to do as an infra provider, right? While you are providing the Lego blocks for banks to be able to assemble them into meaningful pieces and go about with their business, they will need a lot of hand-holding from infra players like us. So how are you handling those?
Right. See again, so from our viewpoint, right, I think what we have done is we have looked at each of, so like I shared, to start with, we provide services from cards to core banking to lending, multiple of these products in bank size, right? What we've tried to identify is the common Lego blocks or the common microservices which are reusable every time you're trying to do a product. So for example, again, I'll continue with my example of Lego blocks and cars. Tires, will remain the same. Okay, maybe the size might vary, but if you're going on cars, more or less it remains the same between different products that you want. You want a sports car versus a MUV or a normal sedan, right? So again, what we try and do is manage it with configurability. So on the same microservice, if you can introduce configurability to let it do different objectives of what the client is looking to achieve, that way we make it more efficient and more composable again. Because today you need something because you're seeing that demand in the market. But tomorrow, because you have to change it, I don't ask you to change the tire. I just ask you to make it bigger. Maybe let's say pump in more air. I'll take a very different example again. I'm into a little bit into mountain biking, okay? So when we take the mountain bikes in the mountain, we have to depressurize the tires. So it's configuration. When I come out on the roads, I have to pump it up again, right? So that's the modularity that we try and bring in our microservices so that my clients or our clients don't have to every time change the whole thing. I hope it answered your question.
Yeah, yeah, you did. So again, right, like we were discussing, continuing on the same thread, you have different customer bases for whom you're, creating composable services, right? So Manoj sir, a question to you. How do you design for very different customer bases, like he was mentioning, right? From digital native startups to large banks that you work with?
So for us, we have done this very interestingly, For us, our customer segment is, fintechs, banks, and large merchants also. So what is happening, when we try to do some development for startups, they're doing things very early and very differently. But over a period of time, when banks have seen this in a compliant way, which is a solution which is running in the market, in a compliant way, they're willing to adapt, So what happens? Normally, these days, what we have seen, startups are trying to test first. Once it is all okay, everything is working fine, then, banks are, accepting the solution. So this is an interesting part for us. We have a customer segment, both as a merchants, as startups, and fintechs and banks also. So the combination is helping us a lot of knowledge and wisdom as a company. Because everybody has a different thought process. When we work with the regulated entities, with banks, they will talk about, big scale, big compliance, everything to be perfect from day zero. This is the thought process they would want. They want everything to be tested thoroughly, ready, and then only go to the market. They will not talk about a lot of launches. They would want to do everything very softly, in the background. So this is the thought process that banks are following. But they want to do big. There are also a lot of thought processes going on with them also. But when it comes to startups, they will just try to work on the new use case that is available in the market. They will also think plus whatever other guys are trying to do, whatever new innovation is happening in the market, they are saying let us take the first mover advantage. Let us try this out. I want to do it first. And I want to do some experimentation also. And this set of customers are ready, for not fully tested, not fully ready. They want to move fast, go to the market fast, test with some merchant, some pilot, some business has to happen. So this is the thought process, which is good. So we appreciate both the thought process. We are a tech solution provider. So for us, we are creating solutions which can be used for any set of merchants, fintechs, or banks. And since our customers are both of these segments, our solutions are, being created in that fashion, keeping both the segments in the mind. So whenever we do a solution for startups, we know that, someday or the other banks will are also willing to adopt. So similarly, our design philosophy is that it can be used universally, and we are getting the advantage of working with both these segments.
Awesome. Thank you, sir. So we'll probably switch gears and get a little more technical, right? Given that this is a tech discussion. Sumit sir, a question to you. What trade-offs have you had to make between faster recovery versus affordability right? Since you mentioned no switching from TC, DR, it is not something that is very straightforward or no affordable most of the times. How do you balance between, resiliency and affordability of your software?
Wonderful question. See, what happens is that if you have to make it completely like your recovery time has to be zero, your recovery data you cannot lose. If it is absolutely, means you have to follow all these stringent criteria, then you have a way to do it. That is active. You have to purchase the SLAs from the service providers, which are very stringent and costly. And you have to have multi-sites, active multi-sites. Whenever you have an active multi-site, then you have to have a data replication in real time. And all of these adds to the cost.
Yes.
On the other hand, if you means relax any of those parameters, the cost drastically comes down. So if it is instead of instance synchronous replication, if you have to do asynchronous replication, the cost drastically comes down. It becomes much cheaper to handle things. It becomes less complex also, because then the complexity of the arrangement also changes. Even the support, means the customer support thing also changes, and everything becomes a little bit relaxed and the cost reduces. Having said that, if you have a high degree of resilience, then the trust increases. So that with the trust, the volume increases. And then the scale happens. And then the problem again becomes a little more complex, because you have a volume and you have to have a real-time replication. But on the other hand, if the cost goes down because you are not doing things in real time, that is also not always very happy path. You are giving time, or you are not synchronously operating, so you are giving fraudster a time window to operate. And that is a problem, because then two places are not in sync at the same time, and that causes a problem. So reconciliation becomes a problem, the fraudster interaction happens, and all these problems comes in. So basically you have to have a trade-off. So the trade-off happens in a way that you can put all your very complex stuffs, for example, things that cannot fail, like ledger updates or a payment happening. Debit happened, credit not happening is not permissible. So all that can have that, tier one. And the other sets, like the reports and the dashboards and whatever, that can be done in a tier 2 format or tier 3 format. And that way you don't need to have gold coating of every service that you're giving. Some can be silver, some can be bronze. That way the cost can be minimized. Having said that, we have also seen, as a service provider, there are regulations or countries say, no, we want everything to be gold-plated. So then you don't have a choice to do that. So now how you communicate that to the customers? Because most of the time we face a problem as a technical service provider. How do you communicate that? So the best way to communicate is that if you want the tier 1, it is so much rupees, dollars, whatever per month. Tier 2, it's so much rupees, dollar a month. And mix, you can put some mix and give that dollar. So it is up to the customer to now decide, okay, you know what, we don't need this, or we need that. So always a trade-off between the tier 1 and tier 2 type of services spread across various service components.
Okay, thank you, sir. Continuing on the same vein of thought, so Manoj sir, this is for you. What are the pitfalls of over-engineering early versus, being underprepared when you are reaching a certain scale? Right? Because we just discussed that in the previous question as well. So thought we'll hear your response.
See, this is a big problem today, over-engineering, there is no choice, we have to do that over-engineering, there is no option, continuous improvement, is needed in order to be ready. Today, the market is very volatile and things are very uncertain. If you see, we have, many contents, many things available in the market, and we are not able to catch up. And many things, and every time when you're trying to create some solutions, on your side, but your solution is created based on certain parameters, certain base, depending on some other operating system, depending on some other hardware, right? And what is happening, you're also trying to do some engineering on your side, but the operating system company, the hardware company is also trying to do the improvement all the time. And they are also changing their versions, their new products are coming up, your new products are coming up. On the other side, business logics are changing. So there are many things which are very dynamic in nature. And, so in the earlier times, things were very static in nature, change was slow. So when change was slow, we have created something and it is running for some years and it was normal, we were not seeing change. But today, the ecosystem is so huge and one solution is dependent on, another 10, 20 solutions. And if there is an impact on one particular activity, then there is an impact on your activities also. And plenty, and change is, every day there is a change, So in fact, today, we are in a lab setup only, So there is a platform which has achieved maturity, which is running. So we are not trying to touch that. But there is another, separate instance which is already running within the ecosystem, and we are trying to integrate many things and do testing and innovation and, research, R&D on a continuous basis. So I think over engineering, yes, we can say that, but we don't have choice today. We have to do that. It's a continuous process. And scale also, what we have done, we are using a monitoring and tracking mechanism, on the scalability side. So we have defined some metrics, and we regularly monitor those metrics on a daily basis. Plus, there are triggers that we have defined. So whenever there is a new customer, we know the pattern also. Whenever there is a new customer, new season, a new payment option, new activity. So we have defined some triggers. So whenever there is a trigger, we review immediately, on an emergency basis and see our parameters, how it is performing. And immediately we try to upgrade or make changes onto our systems. So we are proactively, doing all these activities. And because of that, we are able to sustain all big billion days in Amazon, sale at scale, without any problem. So more of a proactive approach is needed, and over engineering, there is no choice. We have to do it. This is what is my take.
Thank you. Thank you. So for fintechs like you, trying to understand what approach do fintechs take from a 0 to 1 journey, what kind of technology they choose from 1 to 10, and then scaling from then on, right? So whether they should take a cloud native approach, a hybrid approach, or go on-prem, what should be the approach taken?
Right. I think maybe let me put it as a question in for the audience as well, where let them think through this point, right? And I'm hoping there are many fintech players out in the audience as well, and banks. When you're trying to set up a new shop, and let's say you need electricity, are you going to set up your own power station, or are you going to rent it from one of the electricity providers in the market, right? So I think it's a similar conversation between a cloud native versus an on-prem. Now, I think Sumit sir covered it very well when it came to the point about the cost efficiency versus operational overheads again, to what is your motive, what are you trying to do? There are providers like us in the market who can provide you a cloud native technology platform which can help you run your business and you focus on your customer experience and customer journey, what you're meant to do. Rather than saying, I'll build my own powerhouse and do it. The moment you step from that 0 to 1, or maybe go into a little larger audience, the trade-offs start coming in, right? Because you have more capital to your exposure. So then maybe a hybrid experience could be taken into account. So let's say instead of a shop, now you're setting up an hospital and you have to take care of an intensive care unit. Okay. Now for an intensive care unit, you will take care of a primary, but you will also have a secondary option available in case the power goes down. So at that point in time, the hybrid approach, or again, the cloud native still offers a solution where you still have more regulatory compliant, seismic zones and all of those things. So regulator has already obviously thought through it, even for cloud native solutions. So I think from our perspective, the fintech startup or a bank, everyone, right? What they need to think of it is, what are you in for? Do you want to focus on that end customer? Your main objective is to get financial services across to the customer and maybe focus more on that product journeys and experiences that you're trying to build, and rather get a cloud native digital savvy microservices based platform to support you in your journey. Because I believe that building everything in-house more of a traditional way of doing things. I think a lot of globally, and we're seeing this experience, this phenomena globally, right? Most of the fintechs and banks are adapting cloud, and they're becoming more and more cloud native.
So maybe we'll just try and squeeze in one more question. So, in your experience, what are some of the architectural challenges that often get overlooked, and how do you kind of bring that up front so that you start thinking about that from the get-go and not as an afterthought?
Yeah, it's a good question. I think there are several of these challenges, and a lot of these also add to the cost of operating the stack, right? Like a lot of these costs sometimes remain hidden, and then as you start scaling, some of these start coming up. For example, one of the cost that we end up incurring is the cost of technical debt. A lot of times you'll put something together very quickly and to get it out to the market very fast, but then the tech debt keeps adding up, and it's almost like dead by 1,000 cuts. So one of the things that we try to do at Amazon is build for scale right from day one. Like for example, use the microservices architecture. Even when you may not need it, but don't start building a monolith, because that will come and bite you later. Or we have also observed that relational databases don't scale as well. So one of the things we try to do is just use NoSQL from day one. Even when you don't need NoSQL and it adds a little bit complexity, but it just helps to reduce the overall cost. Another one is the cost of compliance. And a lot of emerging countries, including India, there are a lot of regulations that come out. And if you're constantly chasing these regulations, then those costs will add up. So how do you stay kind of ahead of that? One of the things that we have observed is that the regulations are almost always for protecting the customer. So if you take that as a tenet into your architecture itself, that how do we make sure that we are building something for the customer, what is right for the customer, then a lot of these regulations will become what in the tech world we call a no-op, right? No operation needed. For example, let's say that you are protecting the data, the customer's data right from day one and building all the right practices. Then when a data privacy regulation comes out, it's almost a no-op because you've already taken care of most of these things. And one last thing I would like to add is the cost of operation, because that is again another one that tends to add up. And how do you make sure, for example, how do you make sure your services are horizontally scalable so that when you are scaling, the latency doesn't get impacted, right? As you scale, you just scale your fleet and automatically it works. Resilience is again another thing that we've touched upon earlier as well. One example I'd like to give is when we were building out our UPI stack, we realized that we work with multiple different PSPs, payment service providers, and we realized that one of the PSPs had their entire banking infrastructure on-prem, as it tends to happen, right? And we realized that no matter what we do in the rest of the transaction journey, this will become the weakest link, so to speak, right? And that was almost coming true because we would see downtimes, we would see failure rates and so on. So what we did is we worked with that bank along with AWS and helped them move to the cloud, to completely change their core banking system and reinvent it on the cloud. And that helped Amazon Pay, of course, but it also helped the larger ecosystem because that bank was also serving other TPAPs in the market. So net, I think there are a bunch of different costs and different things that you have to take care. But if you're building, for example, observability, if you're building the right metrics, all of that right from day one, and building a good architecture from day one, then a lot of this will automatically scale as you go along.
Yeah, I think when we started this discussion, right, so we at least coming in, we thought scalability was all about processing more transactions, faster processing times, etc. Right? Usually, that is the notion people have. Now, I think after this discussion, at least you have some takeaway that it is not just a single dimension where you process more transactions at a faster time, but there is more to scalability than just faster processing, right? There is other dimensions like compliance related, your data security. How do you make sure you're building a resilient system? There are multiple dimensions, and hope we were able to cover some of those aspects with our panel discussions. So thank you so much for joining this discussion, and thank you all for being part of it.
Thank you.